Good morning, welcome back, folks. Alright, so daily time frame, we're bullish. We closed above the previous daily high. In the 4-hour, we can see that price yesterday reacted on this 4-hour bullish fair value gap. Price swept the accumulation lows, relative equal lows, swept this place higher. And now we're bullish, and price just reacted on this 4-hour bearish fair value gap. I'm bullish. I was expecting price to sweep sell side. As I said previously, I was waiting until 10 because of high impact news, but I decided to start recording earlier because like you know, a retracement is like you have the expansion. For example, here you have an expansion and you have a retracement, but usually most of the times a retracement is not as hard as expansion. Like it's usually a shallow, slow movement. For example like this. I mean, you have an expansion, you have you have a lot of wick here, but it's not like you have a long displacement lower, so it's much slower than the expansion. Let's see another example. Well, this is the same. We have expansion and the retracement. It usually has some wicks in the middle, like this. You see here we have this swing low and this swing high. The retracement is down to the discount, and then we go back to premium. Oh, then we reverse, but this retracement like has some bearish fair value gaps in the middle, which indicates displacement. But in comparison with expansion, I mean, first of all is the retracement. It should go down or a bit lower than the 50% of the movement, which is the equilibrium. This red line dotted here. So after price came to the discount, it should go back to premium, or if you're bearish, the same thing but inverse. Price should go it should displace lower, retrace back to premium, and then continue going lower. Sometimes price won't go back to the 50% of the leg extension. For example, here we have from this leg, let's say from this swing low to this swing high, and price did not reach the 50%, the 50% of the movement. Sometimes it may happen, but if you have a lot of liquidity, most of the times it does reach the 50% and lower or higher, depending if you're bullish or bearish. But yeah, here we have a failed trade, trying to go not long. Yesterday I tried to go long, but the focus is here right now. So we were bullish, right? We're bullish. I was expecting price to sweep sell side liquidity as it did here with a displacement. I would have preferred that price would have swept this sell side and retrace back a bit slower, but it's fine. So yeah, price just reached this last what's it called, London fair value gap, and now in the best case price should be reversing. As you know, a reversal is basically when you have a displacement to one side and a displacement at the same time on the other side. For example, here, like you could see this in a high time frame, like 15 minutes, and say, oh well, this is a retracement, like the these bearish fair value gaps, these bearish candles are the retracement of this movement. But in lower time frame, this will be a reversal. I mean, price just closed below this, just closed above this this 1 minute bullish fair value gap. So in lower time frames, retracements, like after our retracement ends, in high time frame, it's a reversal. It's a reversal in lower time frame. So we already came down to discount. We validated this bullish fair value gap. Price closed above 50%. Then we have another confluence to go higher, and as I said, I'm bullish. So if I'm bullish, I mean, first of all, I want to see this getting burst, and I mean, I could enter in 1 minute. Like if we create let me see. Like my model is not based on inverse fair value gaps. Like, it's complemental. You can use it, of course, as another confluence on your strategy, but that's not my main focus. My focus will be my objective. If we're bullish, I want to see price. Like, you always have to think price as power of 3, which is part of the, I think, 2022 ICT model, like the course. I don't remember if it's 2022 or if it's just a list left around the thousands of videos that may has. So power of 3 is basically accumulation, manipulation, and distribution, and you should think power of 3 based on daily movements. So, for example, today we're bullish. You know, each candle has a wick lower and a wick higher. Like, sometimes you have like the lower wick is shorter than the higher wick. For example, if you're on a reversal, like here, let's see, you can see here, your price swept these two highs and also so these highs. You can say, oh, we can first, if the next candle will be bearish because we're in because price is reversing, you could expect price to sweep buy side, like a periodicity high, and then close lower. And this is the same. If you're bullish, first you wanna see price accumulate. Here we have accumulation, manipulation, distribution. But the general rule is that we have, this is a daily, let's take the daily candle, the body of the candle. Here you have the open, and here you have the close. Right? This was the, let's say the first type of candle you would see on charts years ago, like 20 years ago, 30 years ago. I mean, you could see it with, what is it? This, I think. Yeah. So this is how Wall Street people used to look at charts. So it's hard, you know. like where's my fair value gap? So yeah, obviously no one uses this. I mean, probably there's some people that use them, but personally I wouldn't. So if you're bullish, for example, if you know this day, let's say this is today, if you know we're bullish, price opens here and sweeps here, you're gonna enter right here. Okay, you want to enter as low as you can, if you wanna buy. If you wanna short and price opens, let's say here and close here, if you know price has to sweep buy side to then displaced and take sell side, you're gonna enter here or as high as you wanna, as high as you can. You know, the thing here, like we are 2 minutes away from high impact news, is that I don't like retracements when they show me so much displacement to the opposite side and they're closing so near to the, let's say, to the start of the movement. For example, here and here, as you see, like in this you have an expansion on this high, price run over this high, and then retrace a little here. And you see we have 1 candle, 2 candles, 3 candles, then we have 4. But these two, the last two, like they have very little body and they have long wicks, which usually mean reversal. Like they I mean, it's not like you can trade out like just with that information, but if you know you're bullish and you and price displays higher and one of these highs and price just made this, you can anticipate a high movements and you can say, oh well, maybe we'll stop retracing down, you know, and I can just open here, buy, and then put it on my TPNO over here and on this, the top of like the first candle of this parabolic gap. The thing is that this is not happening here. We're still displacing lower, price is still moving lower. I mean, I know we have high impact news in 20 seconds, and it could also happen here. You see, price came way to discount, and then it expanded way too much. It came to the lower quadrant. This is called first quadrant, lower quadrant, and this is equilibrium. It can happen. Okay, it's fine if it does, but you know, like you need to identify when price is retracing, when price is reversing, and when price is expanding. I mean, expanding is pretty easy, but for example, in expansion you always have parabolic gaps. Okay, you have this parabolic gap, we have 2, 3, and 4. This is the first parabolic gap presented in expansion, and sometimes price will come to the last parabolic gap it made an expansion. For example, here price just retraced this one, it didn't came down to this one, and sometimes price will go all the way down to the first one, and that's okay, but you need to identify when price is reversing in lower time frame on that retracement. But here, how many parabolic gaps do we have? We have this one here, price inverted. We have this one here, price also inverted, and we have this one, which is the last one. We also have this one, but this one is already validated, so I don't care about this one. I'll just see this one. If price violates and closes below this one, like closes over here, I mean, my bias will change because I know that price tries to go lower. It's not just trying to retrace, but on the other hand, if price respect this bullish parabolic gap and lower time frame, like 4, 5, 3 minutes, you see that price closes up above this bullish CISD, this bearish CISD. You can already say that price is reversing and you shouldn't sell long. Like in lower time frame, you have a lot of, like you have much more you have a lot more fair value gaps, but the main and the most important fair value gaps are the one in high time frames, like 5 minute, 15 minute, and yeah, that's it. Okay, probably for the next 5 minutes I won't do anything. I'll just see what will price do. Another thing, because some people look at this and say, oh, we have a fair value gap, right? What is price doing? Price just violate this fair value gap. We're bearish. No, we are not. You know, it used to happen to me, and I was like, wait, so how do I know if I'm bearish or bullish? Because price just violated this fair value gap, closed way down below the lower part of this fair value gap. As I said, you will have many fair value gaps along a displacement, but you will need to wait to see price react on any of these. And I know it will sound weird, because like you say, oh, what if price reacts and then it displays higher and I don't have an entry? It can happen, that bad. But this is the thing, you should see in which fair value gap on a high time frame, like 15 minutes, 5 minutes, price reacts or disrespects or respects in high time frame. Then you go to lower time frame and enter long or short. Because if I'm seeing this, we have 10 minutes left, right? Let's say price after 10 minutes close here. We have fair value gap here, and the third candle of this fair value gap is bullish. What does that mean? That this fair value gap will get price, like I know price will go back to this fair value gap. I will probably violate it, so I will go down to the 1 minute, 3 minute time frame and try to search for a reversal for longs. Why? Because in the higher time frame we respected this bullish fair value gap. Okay, but either I want we have like 200 pips here. I won't aim too high. Like we are in macros. Well, we're close to finish the macro session, but that's right. Now you see here this bearish 1 minute CISD. What happened if price closes above this? Let's say this is what price does. Say price does this, comes back here, respect this fair value gap, goes out this, closes above this 1 minute CISD, then comes back, respect this this bearish inverse fair value gap, come here, respect it, and then expand higher. That will be a 1 minute entry with my model. The problem is that if you go too low on time frames, you will start to like get lost on the narrative, because sometimes like the 1 minute has like such a few liquidity that is hard to notice when price will continue expanding higher or will just reverse lower or accumulate. So sometimes you go on lower time frames and say, oh yeah, we're bearish, but in fact we're not accumulating, but we're ranging within this 15 minute fair value gap. So that's the thing, you should always have a look first at a high time frame, set your goals for the day. Oh, I want to see price do this, I want to see price respect this level. and then trade. Go into lower time frame, enter, but always following your rules, which is the hardest thing. I mean, the best thing will be to open like after price runs here. If it does close above this high, I mean, sorry, too far, that's fine. It would be nice if price close above, retrace back, and then expand higher. I could aim to this 5-minute very short value gap, but I mean, this could be bearish or bullish. I don't know really. Like for me, we're bullish, but we have to see what will price do. And I still have to make the I think it was 13, 14, 16 of no, it was the 16th of January. It was last Friday. I made a trade, but I did not record it because it was, I don't know if it was at 12:30, something like that. And I was waiting. I waited the whole fucking morning for a trade which didn't appear, and then I saw an opportunity for continuation, and I took it. I just like I made I think like I don't know, $120 or something, because I did 2 trades, both shorts, both went good, but still it wasn't the best scenario. We might go lower, maybe until to the New Delhi opening gap. But yeah, like if you go to the lower time frame, you see this accumulation. In a higher time frame, this is only a retracement, you know. So going lower time from now, it's like it's very confusing. So only when you have a clear direction in a higher time frame, you go to lower time frame and enter. But if you do not know what's happening on the high time frame, don't go to lower time frame because you'll get stopped out. Really, it's very confusing if you don't have a clear objective of the day. For example, I personally want to see price. Like it will happen both. My first idea was for price to sweep sell side, retrace VAG down to discount, as you see here, as it already did, and now we expand higher. You know, and in lower time frame, which is 15 minutes, in lower time frame, this will be a reversal, and my model is a reversal. So that's my idea. What could happen? But in the 1 minute and a half that we have left, price comes down, inverse this fair value gap, and then we have to search for another retracement higher and then expand lower. I mean, or just continuation. That's not what I want to see. It could happen, and if it does, I will be prepared, because I mean, trading is about like being ready for everything. Is reacting. It's not just buying and selling. Like, it's not only anticipating what will happen or just thinking on what you want to see. It's also thinking, oh, what could happen and what will I do in that case, you know. So yeah, it's still the same. I mean, as long as price respects, like as long as the body stays within this, well, that's nice, because price respected the threshold. So the body didn't like close below this. Now we can start looking for longs. So that was the whole mental process that you need to go through. We have a lot of things here. We could do this. I like how it's looking. This 1 minute. I think it actually could work. I need to close off of this. The price needs to close off of this. And if this candle, this 5-minute candle, stays below this high, we'll create a swing high. And if we have a swing high with CISD, okay, no, it's fine. But I'm still not trusting much that we have so much accumulation around here. Like I could literally wait for price to close above this 3-minute CISD instead of entering lower time frame. Like if you enter lower time frame, you have more risk, because I mean you use lower, like use smaller stop loss, but you can also like have higher RR. So I mean, if I'm aiming to this, I need to be sure as I said, the power of three, it also works. Like, it works on every candle. Obviously, you can't do that on a 1 minute candle, 5 minute candle. Some people do it on the 4-hour candle. Like, they say, oh well, what's the next candle likely to do? It's likely to go lower, to a higher. It's likely to do what? And then based on that, they go lower time frame, 15 minutes, 5 minutes, and they trade. So we may accumulate a little here, as you saw here. Like, after the retracement, you have a little, like, some choppy candles, as well as here some choppy candles, but the direction is clear, you know. Like, you start aiming higher, and this is the same thing. You know, I could go here. You have these 3 minutes CISD. Not very clear because we're in the middle of an accumulation, but I think it could work actually. Just I don't like these long wicks or like walls in the middle of my CISD. It's better. Like, it's better if there's no wick in the middle. But that's fine. Like, we have, yeah. Okay, wait. We closed above the 3 minute CISD, and you could say that if price retrace back to this 3 minute CISD, we can put our stop loss here. It's 24 pips, and just aim higher. And the problem that is so low is that, like, when prices start moving, it's not that easy for price to come, like, to go all the way down again. So maybe price will just continue going higher instead of retracing to this accumulation zone. But it may go down insane one, and if it does not, then I will just aim to this expansion in base of this 1 minute, 3 minute CISD. That's just. Alright. So I think if price does not come back here, I will just, and this looks good for me. I mean, price respecting threshold, the 15 minute. Buyers were bullish. Let's see if we have SMT. Like, I mean, yeah, we have SMT over this low. Yeah, price here just swept it. Maybe I have to fill on this bearish for body gap price will come down. and if it doesn't, then I will just wait for price to close over this 5-minute CISD, and yeah. Let's have a look. Wait, because I'm having some trouble. Something on something. Like, obviously I won't open now. But okay. Yeah, probably I'll just wait for price to break this 5-minute CISD, and that's it. Instead of the 3-minute. Okay, let's have a look for here. Okay, so let's see. Yeah, the same shit. Yeah, I'll probably just wait for price to close above this. I mean, this would have worked, as you see. Like, price did not sweep this low. It could have swept it, but just to be sure, I did not open, because we need to make as much money as we can, preserving capital, and only entering on high probability situations. This means as the price come off here, break this 3-minute CISD, it comes back, and probably after going here, price will go up to here, to this body gap and another block, then we will come down, and then we will enter. Alright, so price just closed above my 3-minute CISD. I want to secret I mean, I could enter or now, right, like right here, right now, or wait it until it creates a fair value gap, and then enter in base of that fair value gap or the CISD. I could both. It would be nice if price stays over here, close like the third candle, it's a bearish candle, and it comes down. Well, as you see here, this is a lot of coincidence, right? Right to the main threshold of the week in the old block. Yeah, for me that's about it. So we'll just open there. If price comes down, that's fine. So conditions for this is first we have, let's do a little recap. And we have these dots. Alright, so what do we have? Price expanded, accumulated a bit, retrace back, swept to the side, back on this 15-minute fair value gap, respected, and now we're dealing with this 15-minute bearish fair value gap. So yeah, well, we respect the 5-minute, but we embrace the 3-minute. So I mean, anything could happen. I think that still that's not bad. I mean, I know the price could break this 5-minute and then this place much higher. That's why I wanted to enter now, because I know that if price displays now, like if I enter back again, it'll be kinda late. We're already at 10:40, so I just wanted to be part of the movement. And now what could happen is if this is the third candle, you know, we have a lot of kind of fair value gaps. If the third candle of the fair value gap that constructs a fair value gap is bearish, but the fair value gap is bullish, that's mean that probably price will go back to the fair value gap. If the third candle closes like this with very little body, it's probable that price holds like that this fair value gap holds, or that price retraces back. But instead, if the fair value gap like this, you know, you have 1, 2, 3 candle. If this candle closes like this, as much of this placement this one, then price won't go back. Like, it's very little. There's very low chances that price holds back. That price goes back. So yeah, like this, price may go back there. It wouldn't bother me if it does. So we have how much time? 15 minutes, 5 minutes, and the price validates or invalidates this fair value. Okay, now yeah, we just broke this 5-minute CISD. Shit. I mean, I could add more. That's not part of my program. So no, thank you. But that's an option. And here we have the yeah. It's also good that the body of the candle respects the CISD. It's also a nice indicator. Alright, so we have that. It's 1 minute, just a little choppiness. That's what sometimes, that's why, yeah, sometimes I like to enter higher time frames. It's clear oh shit, it's more clear high time frames and lower time frames for me. It's just there's too much noise inside here and you can't see clearly. I mean, obviously with all my annotations and stuff it's less clear, but in high time frame you have like you're clear, like you know what you wanna see. If you see, you enter. If you don't see, you don't enter. That's it. You don't need anything else. So I mean, as you hear us and as I said before, it's good that the candle that broke a CISD higher or lower creates a fair value gap, and as you see here we have 5 minute fair value gap with the candle. You see, this is the candle that broke higher, not by much, but it did, and here we have fair value gap. So this fair value gap might be validated, might not be validated, but if it does, it's good. I know that it's good, and we might see a retracement. Not really. No. If price retrace, I just want to see that this fair value gap, mid threshold, and then continue expanding higher, as it's doing right now. But it may not even retrace back, you know. It depends a lot. Okay, so we have another block here, and we have a 3 minute bullish, 3 minute bearish fair value gap. I may take half of my position out here. Yeah, this is above 50% of my movement. Let's see. So this is the thing. What you could do is, if price did retrace back here, it will probably leave a swing low. After price leaves a swing low here in this fair value gap, that swing low becomes a protected swing low. That means that if price is bullish, it shouldn't go down back to that swing low, so you can move your stop loss and chill, because price shouldn't go back to that swing low. And that's what happened with this swing low. We have a fair value gap and we have swing low within that fair value gap, so this swing low is protected. I mean, I could move my stop loss here near to break even, but I don't want to do it yet because I want to see price move a little higher and create some like structure, because if in this expansion all the candles are bullish, it's not like I have a place to, like, there's no support for my stop loss, you know? So I need a place, I need some bearish candle that supports price from going lower, and yeah, that's it. So if price goes back to this, like arrive this, touches this 3 minute, this 3 minute bearish fair value gap, I will take probably 40% of my position, which is, let's see. For 36. That's what I will take when price touches that fair value gap. You know, it's very important that you get used to take partials. It's literally one of the, I think it's the most not the most important. I mean, you have other technical technicalities which are more important than partials, but literally this will save you from a lot of losses, I promise. Taking partials and break even, it's literally the best thing you could ever do. If you probably risk manage your capital, this is what you should do. This is risk management. Taking partials, moving to break even. Like now, I would already have almost half of my position now. And like, if you do this constantly, you have not like, if I know taking partials might not be like obviously it won't give you the 100% of your profit. Like later this will be lower, but I don't care because the profit is there, and it's almost 806. That's 80 pips, and that's not little, you know. And if you did with more capital, you won't need to do this. Like literally, it's a nice way to save capital. It's a nice way to reduce risk, and it's perfect to conserve the profits. Plus, it gives you like a dopamine, like a dopamine shock, because you say, "Oh yeah, when it touches, I already have some profit," and you don't have to worry about losing. This is already a profit day, you know. The fuck? Ah, you go. As you see, that's why I put it the the limit order at the low, because I knew price would only touch it. Like it might have went like deeper, but I didn't know that, you know. And it's only 2-3 pips, and it's not worth it to move your limit order 2-3 pips, and price might now like just reverse down or retrace, and you might be losing money, and it's not worth it. So I mean, here, how much do we have? Okay, this is the min threshold. This is the 50% of the whole movement. You know, now instead of 800, you have $522, but that's fine. Like that's still not little. And I risked 1%, and now we have a lower risk also. You know, instead of 500, now we have 300. So it's nice, you know. It's always good to take some money for the pizza. How much was it? 42 ticks. Okay, so what I wanna see now, if price creates a fair value gap here and respect this fair value gap, I would like to move my stop loss there, or at least break even. Well, this one, it should respect this one, and then it should disrespect this one. So we have two conditions at this point to go break even. Price touches the fair value gap, respect it, and then disrespect the 3-minute fair value gap and broke above this 3-minute CISD. And I won't pyramid this because I don't think it's, I mean, I could actually, I really want to. I mean, I could say, oh yeah, after price comes back to this 5-minute CISD, which it just did, or come back to this 5-minute fair value gap, which it will, because it went down just for that. As I said, I'm not worried at all, because I know what price will do. I saw it a lot of times. Well, I thought it will go low. I mean, no, it's fine. It will go low. We have 4 more minutes. I mean, it will be very weird that price just went down to not touch it. So it could happen. I'm not saying it won't, or it will. Usually, price goes down, touches this 5-minute fair value gap, then continue expanding on the way. Well, maybe this candle will. Can take this out. Soon I will have to have lunch, so I don't know for how long I'm gonna be able to hold this trade. Like hold, I mean, we hold like I mean that I will be here talking. Obviously I will leave the trade ongoing, you know, but I will probably will managing it with my cell phone, and the record will continue. I won't stop recording obviously, but that's fine. More of wind burst this, and wind burst this one, and wind burst this one. I will go break even. And later on, I don't care if price stops me out because I already took a profit. So for me today is already a profit day. If price something crazy, take my stop loss. Well, we're macro. We're on the last macro of the morning, from 10:50 to 11:10. I was expecting prices to validate this for value. I don't know why I didn't. Maybe now I will. Let's see. But I don't know why it's taking so long. I was expecting this to be a little faster. Oh, finally. Alright, you did. Okay, that's fine for me. Like, I don't need to go all the way down. That's fine for me. I just want to see price react higher and this place higher. And it's fine that I did not go to 50%. As you see here, it's a bit blurred, but as you see here, 0.5 was right in the mid threshold. I mean, price could do that. I mean, maybe it won't do that. I don't really care. The only thing that I care is like for price to retrace this for body gap. And that's what it did. And now, yeah, I just wanna see reaction, quick reaction. Yes, much that we can look for. Just this. Well, we obviously inverse this 15-minute fair value gap. So it should also act as support. So at any moment I wanna see price expand higher, moving bullish. We reach it for the upper quadrants, and now it looks like we're already reacting out of this fair value gap. I don't price. I don't know why the hell is stopping. Like, come on, bro, move. Like, stop me out or go to my tip profit, but don't stay there in the middle. You all think we're expanding? We'll see with this fair value gap. this fair value gap. We have 3 more minutes. And that should be good. Like if we inverse this fair value gap and we broke higher, this will be my break-even point. Alright guys, listen, I need to go eat. It's kinda urgent, so I'll just leave the trade and manage it from my phone. Okay. If I see that it's not expanding higher, maybe I will just close it. That's it. I don't have a problem with it. I need to also mark out this. Alright guys, I'll come in. Okay, we'll come back more or less in 30 minutes. See you in a little, guys. Alright guys, I came back already. Took some time, but we're good already. We're fine. As you probably saw, I was managing my trade with my phone. Here I won break even. It took some time to reverse this, but we did. And now we're just heading up to this the low of the 5-minute fair gap. Unfortunately, after 2 hours of recording, my recording app stops recording, so if we'll probably hit it. This is just 20 pips, 15 pips, but if we don't hit the take profit before in 20 minutes or less, unfortunately the recording will stop. But anyways, today is a profit day, so for me today was W. Okay, I did already a little recap on before. I'll do it again. This time with the stuff we have, with what we did until now. Alright, so first of all, we sprayed high, we broke above this 5-minute CISD. I enter here on price retrace back after breaking out, and this candle was the one that broke the CISD higher and was the one that created a 5-minute fair value gap. After that, price came up, touched a 3-minute virtual body gap, in which I took a partial. You see there, right here. You can see the arrow there. For that, I expected a retracement to the 5-minute fair value gap that the price created after breaking this 5-minute CISD higher, and then we inverse this 5-minute bearish fair value gap, which here you can have enter again. This could have been an entry, sorry, there, and you can head up to this, whatever. 1.5 up, 1 to 1.5. This is very nice. So yeah, here after price took this high, I won't break even, and now price is heading is reacting with this 5-minute order block weak. You see price reacted exactly on the min threshold, sorry, the consequent encroachment, and hopefully in the next 15-minute price will touch that TP. Yeah, pretty much. Well, maybe we'll just range of it. It will be nice if, it might retrace a bit now. And we have expansion, retracement, expansion, retracement, expansion, retracement, expansion, and then we accumulate, and we might see a retracement now. Back to this 1-minute fair value gap. or maybe this one, and then just continue, and after price reacts, and if it does react properly and goes further, I would expect the next expansion to already take my TP. All right. Oh my god. Seems like it's close to touch the beam. Like, it did retrace a little. At this point, it did came back to 50% of the movement. Now it just swept the highs. It's just ranging. I hope in next 5-minute candle, I hope this shit touches. Because like if no one will just post, like you will see now at the end if it hit TP or if it didn't. But it's fine. Anyways, today was a nice day. I don't know why the hell it's not ranging higher. Maybe it will just retrace in this, like out of this movement in 5 minutes. It will come back to this order block. We start a 5-minute CISD, but it will be nice that before tracing it touches this 5-minute very short body gap. So yeah, that was all for today, guys. Thank you for watching. Well, let's hope it hits this one. Tomorrow, let's check what we have tomorrow. Thursday. Fuck, it's Thursday. Oh shit. Friday, we have 9:45. We have, yeah, just that 9:45. We have this, that's fine, that's alright. But that's it. Alright, nice. Come on, bro, come on. I don't know why it's accumulating so much. Like, obviously, you know, price, it only heads up to imbalances and voids of liquidity. That's the only reason why price moves. No other reason. It does not exist. Price can go up, can go down, or sideways. Sideways just to accumulate liquidity. It can go up to rebalance and imbalance, or it can go down to rebalance and imbalance, or it could go higher to sweep buy side liquidity, or it could go down to sweep sell side liquidity. That's it. There's no other reason. And please stick this on your mind, because it's true, and it's how the markets and trading works. If you know if you know what's the direction of the price, like you know almost everything already. Like if I know I'm bullish, even if price is like it's not delivering much, I mean it does, because it did actually came back to this 5-minute for body gap, but it's going slower. Still, like it gives you nice opportunity to watch carefully price action. And if you see what was, let's check it out together. What was the objective of price here? First, to sweep sell side, it did, and then to rebalance and imbalance. Here it did. This wasn't the objective, this wasn't the objective, this was the objective, right? You rebalance it, and then what's the next objective? If we're bullish, it can be rebalance this imbalance, it could be this like this relatively go highs, buy sell liquidity. I know it's something around here, but from this whole movement in the 5-minute, like if you're here, you open here, what will be the closest void of liquidity? What's the closest next, like what's likely price to go next? Here, where and why? Well, first because we're bullish. Second because price respected this bullish for body gap. Third because we expanded, we broke this 5-minute CISD. Third, because we retraced VAC and we respected the 5-minute bullish fair value gap. And fourth, because we expanded. So I guess this is our next objective. And the transmission, sorry, the recording will cut now because it's already reaching the 2 hours. So I will post the results. Thank you for watching, guys, and see you tomorrow.